let's get into it. Japie, we discussed with short-term insurance, we discussed generalities of short-term insurance. We've discussed household contents, and we've discussed the building.
We haven't discussed building.
We haven't discussed building.
That's the topic for today.
Okay. So aren't we going to do car insurance today?
Let's see how far we get with buildings, and then we can move over to car.
Okay. So, so we've discussed contents, we've discussed all risk. Today we're going to start with the building insurance. And I've got a personal one that I want to discuss with you, what my options are. So that's my question. But let's get going with building.
Yes, Lourens, again, thank you very much for having me back. I feel we're adding a lot of value to our listeners in explaining exactly what short-term insurance is and how it works. Like you mentioned, we've discussed generalities, we've had a look at household contents and all risks. Now we get down to the building. Now, to understand the insurance on your building, you have to understand what is defined as building insurance. On that subject, it's also called homeowners insurance. So homeowners or building insurance is defined as the structure as well as all permanent fixtures and fittings to your building. The reason they point that out is that your DSTV is not part of your household contents because it's a permanent fixture or fitting.
The dish.
Okay. The same as your alarm system, the same as your light fixtures. All of those things are deemed building insurance. Probably the most important part to remember when we're insuring a building is that we're insuring the structure and any and all structures on the whole property. So your outbuildings are included in your building insurance. Your swimming pool, your LAPA, all of those things form part of your homeowner's insurance. And all of those things need to be insured for rebuilding value. And that's a tricky subject to get to.
Yeah, I think that's something that we really need to get into, because I've seen so many people and myself look at what the value is that they've insured my buildings for, and then I think to myself, come on, it's never going to take that amount to build this house. So that's something that I think is very important. One of the things that I just want to add to that before we get into the nuts and bolts of this is, guys, I see it a lot of times that we get to people and we say, listen, what is the need for your risk if you pass away or whatever? And then people say, yeah, but I've got insurance through the bank and they will pay off my bond if something happens to me. Guys, very important, your homeowners or building insurance that's mostly paid through the bank, and we'll talk about the fact that you don't have to have it through your bank. We'll chat about that now. But that is for the building. It doesn't include life insurance. So if you need life insurance to pay off the bond, make sure that there is a life insurance policy, not just homeowners insurance. A lot of people are under the impression that their homeowners is actually the insurance that's going to pay off their bond.
That's so true, Lourens. And again, it gets back to understand what's insured and why it's insured. If you don't feel like reading through 50 pages, get somebody to help you. Get a financial advisor to explain to you exactly what is insured, why it's insured, and in which circumstances it'll pay out.
Yeah. Another thing that people just need to look at is, guys, make sure that your homeowner's insurance, if it is through the bank, that homeowner's insurance comes off your normal bank account on a monthly basis. Because what can happen is the bank can put it on as an annual payment on your bond. So what basically happens is you pay off your bond over a period of over the year, and then at the end of the year they just add the insurance premium back onto your bond, and then you pay it off again. So then basically you're paying interest on your insurance premium. So it doesn't happen that often anymore, but it was something that was very prevalent a couple of years ago. So go and look at that. Make sure if it does go off your bond that it is separate from the rest of your bond, that it doesn't get added to your bond balance at the end of the year. Okay, so I've got a question from Maria. There's two questions. The one is on car insurance. So Maria, we'll definitely get to that. I'm not going to throw it in here yet. We'll get to that when we get to car insurance. The second question she has is, how is homeowners insurance rates calculated? So that's a very wide one, but Japie will give us an idea.
Yeah, that's a very wide question to answer. But if we look at how insurance rates are calculated overall, there's a couple of factors that do play a role, and that does affect your premium. As opposed to life insurance, where when you're younger it's cheaper, usually short-term insurance is more expensive when you're younger. So over and above that, they take a couple of factors into account. More specifically, when we're referring to a building, the area, the type of construction, whether it's a brick wall, a asbestos wall, a wood house, whatever the case might be. The roof construction also plays a very big role. Tile, zinc, grass, all of those factors determine the premium. And over and above that, the area. Because a lot of areas, especially when you referred earlier to the mining communities, there's a big risk of subsidence and landslip. So that does definitely play a role. So when looking at insurance premiums as a general calculation, they take all of these different type of factors into account. Remember, insurance companies also keep track of how many claims they have in a specific area. So that's why the area does play a role in determining the factor of the premium.
Yeah. Okay, so one thing I think that we need to look at is firstly the value of the house. That would include the level of fittings and what do you call it? The
fixtures and fittings.
Yeah, but the tiles that you have in. Somebody who stays in the middle of Sandton or Houghton in a very expensive area, chances are the tiles that they have are much more expensive. The taps and those kind of things are much more expensive. Somebody who lives in a more middle class area won't have that kind of expensive taps. So you need to look at that as well. If your house is you've really forked out a lot of money for your taps and your tiles and you've really done it, then you must add it to your building. You can't just have it the same as the guy next door who's got normal taps, normal tiles, normal everything in his house. It will be more expensive. I think the area, Japie, I think the area comes in what you're saying is more of the things in the area that could have an impact. Are you next to an open veld kind of thing? Subsidence and landslip, is there mining activities, those kind of things. And then also, not so much in South Africa, but weather phenomena. Are you in an area that has a higher chance of floods? And those kind of things will also play or have an effect on it.
It does, definitely. I mean, in South Africa, if you look at insuring a building near the coast, it is going to be more expensive than insuring a building in Johannesburg, for instance, because of the risk of flood damage.
Yeah, and certain roofs is different than others as well.
Very much. And that brings us back to what I mentioned earlier, rebuilding value.
Yes, yeah. Let's chat about that. And then after that, we're going to answer Albert's question. I'm going to read the question and then we'll get to there. How does homeowners insurance differ from renters insurance and why? Okay, so we'll get back to that answer. I'll read it again before we answer it, but let's quickly chat about rebuilding value.
You touched on it, Lourens, by mentioning the type of tiles, the type of taps, all of those things. When insuring our buildings, we need to make certain that we insure it for what it's going to cost to rebuild the building should it be a total loss. And a lot of people get upset when we're referring to a total loss, whether it be building, whether it be your household contents. An insurance company always looks at the maximum risk. And it's always strange how people tend to underinsure their building, underinsure their household contents, but when they're insuring their car, they're fine with insuring retail value, with the cost of replacing the vehicle. It's exactly the same thing.
Yeah, because they won't want a second-hand car with the same amount of kilometers on.
Yeah. So when we're insuring your building, look at what it would cost to rebuild the building and the outbuildings from the ground up.
Yeah. I think it actually becomes more than that, Japie, and you can correct me if I'm wrong. it's not just rebuilding, it's breaking down as well. So let's say, for example, the house is completely gutted by a fire and all there's left is just a few brick walls. It includes taking down those walls, to removing all the rubble from your property and then rebuilding. So it's actually almost you must look at it as the value to tear down and build from scratch.
That's very, very true. And that's why on your insurance schedule and in the policy wording, when you read through it, there's certain items automatically included. Things like fire brigade charges, for instance, that is included in your policy. Destruction of the property, so tearing it down and removing all the rubble removal. All of those things are included in your policy and have to be taken into account.
Now, when I did my renovations here, that's something I didn't even budget for, the rubble removal, and then I very quickly realized how expensive it is to remove rubble and everything from a site. It is definitely a cost that you have to budget for. I think another thing that's included in there as well is for you to stay somewhere while they are rebuilding your house, which should also be included.
That is included, but that you don't need to add to the value of your building insurance. So in the event that your building is damaged to such an extent that you are unable to stay there anymore, the insurance company will make provision for you to rent a property or stay in a guest house while they are busy repairing the property or rebuilding the property.
Yes. All right, so let's quickly get to Albert's question. There's quite a few questions coming through thick and fast. So Albert asks, how does homeowners insurance differ from renters insurance and why?
Right, so that brings us back to one of the fundamentals we discussed in one of the previous shows. Again, guys, go back, listen to the previous shows. This is a series, and if we have to repeat everything every time, it's going to be
2 hours,
5-hour show each time. But Albert, to get to your question, it all boils down to insurable interest. Remember, we mentioned that in the event that a loss occurs, only the person who suffers the actual financial loss can claim or can insure the item. So that brings us to people renting a property. When you are renting a property, you are not responsible for any losses occurring to the building. You can insure your household contents, because if something happens, you will suffer a financial loss. But if the building is damaged, you will not suffer a financial loss. The owner of the property will suffer that financial loss. So that's why we have two different types of insurance. When you're renting, the owner needs to insure the building. You will insure your household contents. So you are covered in the event of a fire, for instance, where your household contents will then be covered
as
and
the
paid
renter
out.
now,
as the
tenant,
renter,
yeah.
as the tenant. While the owner of the property will have cover for damage to the building. There's also some clauses that you can add. There's also types of insurance you can take out whereby you cover rent, the rent payable by the tenant, in order to make certain that should the tenant just abscond, you can claim.
Yes.
And have cover for that amount.
Would there be cover for damage caused by your tenants? Would that be covered normal under your homeowners? Or is that part of that renter's insurance?
It's again a twofold. Under your building insurance, you have a clause which states malicious damage. So malicious damage would be any type of damage inflicted to an item or to the property by a third party. So that's a standard clause.
Yeah, so if the tenant gets upset with you and he freaking breaks the doors and everything before he leaves, you can claim for that.
You can claim for it, yes, correct.